Hello traders, you're welcome to this video and you're welcome back to the channel. In this particular video, we are talking about one of the most essential tools in Forex trading, and that is the moving averages. But here's the twist. We are breaking down the different types of moving averages so you can understand how to choose the best one for your trading strategy. All right, so we're just going to be quickly covering the simple moving average, exponential moving average, and weighted moving average. All right, explaining what they are and how they work and when to use them. All right, so stick around because I'll share some tips on combining these moving averages to uncover trends and momentum like a pro. And hey, if you're enjoying this type of content, don't forget to hit that like button and subscribe for more trading tutorials and insights. So let us dive right in. Now, before we dive into the types, let's quickly define moving averages. Okay. So a moving average is a technical indicator that smooths out price data to help traders identify trends and patterns, right? So instead of getting caught up in the noise of every price movement, moving averages create a clean line that represents the average price over a specific period. All right. This makes them incredibly useful for spotting trends, determining support and resistance levels, and even identifying potential entry and exit points. Now, while all moving averages serve this purpose, the way they are calculated can vary, and that's where the different types come in. So let us explore them one by one. The first that I'm going to be talking about is the simple moving average. All right. The simple moving average, also called the SMA. This is the most straightforward type of moving average. Okay, it's calculated by adding up the closing prices over a specific number of periods and dividing by that number. For example, if we are using a 10-period SMA, right, it takes the 10 last closing prices, so long as your setting is applied to close, okay, because you can apply to open, apply to high, low, and the rest of them. So you're going to apply to close. So it is calculated by taking the last 10 closing prices. So for example, if you're on the 1 minute chart, it calculates the last 10 candles, which is going to be the last 10 minutes. All right. If you're on the daily chart, calculates the last 10 candles, which is going to be the last 10 days. Okay. And then after taking the last 10 closing prices, it sums them up and divides by 10 to create a single data point. It's called simple because it gives equal weight to all the data points. Now, the SMA is great for long-term trend analysis because it smooths out short-term fluctuations, but its simplicity can also be a drawback. It's slower to react to price changes compared to other types of moving averages, which might not make it ideal for fast moving markets. Next, we have the exponential moving average. All right. The exponential moving average, I'm just going to change this simple to exponential. And here we go. All right. Now, this is also called the EMA. So unlike the SMA, the EMA gives more weight to recent price data, making it more responsive to price changes. Now, this responsiveness makes the EMA a favorite among traders who want to capture short-term market movements. For example, if you are trading during a volatile session, the EMA will react faster to price changes, giving you signals that align more closely with current market conditions. Okay. However, this speed can also be a double-edged sword. The EMA might produce more false signals because it reacts so quickly to price movements. Okay, that's why many traders use it alongside other indicators to confirm their decisions. Now, finally, let us talk about the weighted moving average, all right, or WMA. Okay. Now, just like the EMA, the WMA places more importance on recent price data. Now, we're going to be using, let us, Let us use the default LWMA that is here on the MetaTrader platform. So the weighted moving average is especially useful for traders who want a balance between the smoothness of the SMA and the responsiveness of the EMA. All right. So the weighted moving average is often used in short-term trading strategies where recent price movements are critical. However, it can also be more complex to calculate and might require fine-tuning to match your specific trading style. Okay, so you can see that there are just some few differences between the SMA, the EMA, I mean visual differences, visible differences on your chart between the SMA, the EMA, and the WMA. So let's look at the SMA again. Can you see how it looks? Just little visual differences. Look at the EMA, which gives more weight to recent prices, and look at the WMA, specifically in this case, the LWMA. You can see how it also tries to give a balance between the SMA and the EMA. All right. Now, another popular method to use the WMA is actually for short-term trend identification while relying on an SMA for long-term trends. Okay, so you can actually use the SMA to identify long-term trends, and then you can use the WMA for short-term trend identification. All right. Now, this multi-time frame approach can help filter out false signals and give you a clearer picture of the market. Okay, now moving averages are essential indicators for traders, but understanding the different types can help you use them more effectively. Okay, whether you prefer the simplicity of the SMA, the responsiveness of the EMA, or the balance of the WMA, each has its own strengths and applications. All right, so if you have any experience using either of these indicators, you might want to share your thoughts in the comment sections. And if you have any questions at all, just drop your questions in the comment section. All right. If you found this video helpful, make sure to give it a thumbs up and share it with other traders who might benefit. Okay. And do not forget to subscribe to the channel for more trading guides and tutorials. All right. Let me know in the comments, what is your favorite type of moving average? Do you prefer the SMA, or do you prefer the EMA, or the WMA? All right. Let me know in the comment section. And how do you use the indicator in your strategy? I would love to hear your thoughts. Okay. In the meantime, thank you for watching, and I'll see you in the next video.